All right, I'm going to keep it real simple. This is why I don't wait for confirmation before entering a trade, whether it's Forex or crypto or stocks. I usually just enter immediately the price gets into a zone. There's a little bit of nuance, but here's the main reason. I think it's just a complete waste of time to wait for confirmation. By waiting for confirmation, it generally means you get a shittier price to enter at. It means that your stop loss has to go further away from the zone and your potential for profit is lower in terms of multiples of R. Let me show you an example. I got an alert here last night on GBP AUD for this zone. It's a daily, weekly resistance zone. And so I got this alert up here, and this was about 10 hours ago. And of course, I was asleep last night, because I'm not awake at like 2 a.m. in the morning like a psychopath. And so whenever price got here into this zone, I was not able to enter. Let me show you why I'm not going to be entering this trade right now at the current prices. If I'd entered up here at the alert where it was at, without waiting for confirmation, with a stop loss just above the zone and a target at 1-to-1 risk reward ratio like I usually do, this is what the trade would have looked like. And quite literally, it would have almost hit the profit target. And depending on exactly where I entered and exactly where I put the stop, it might have in fact already hit the profit target. Let me show you what happens the moment you wait for quote unquote confirmation. Confirmation is basically just waiting on a couple candles that show that price starts going down the direction that you think it's going to go in before entering. That's basically what most people mean whenever they say confirmation. If you mean something else, I'm not talking to you. I'm talking to you if you think that when price starts bouncing away from the zone with a few candles, then that's somehow confirmation that price is rejecting the zone. Here's what happens. Whenever you do that and price starts moving down, say you get a shittier entry right down here. So let's just say it's like down there. With the same exact stop loss, now your profit target has to be essentially double the distance, right? Because if the first stop loss location right here was 122 pips, this right here is 163 pips of the profit target, right? So not double the distance, but it's significantly larger. And in terms of where the original profit target was, it's almost double the distance away from where the original one was just because the entry was shittier. So what this means is that price has to go even further for you to hit the profit target. Okay, and it's not the worst deal in the world, but I'm saying it's a lot worse than just this up here, entering up here and having a tighter profit target. And also, if it just goes back in to retest the zone and touch the previous high that it was at, what ends up happening is now you're halfway to the stop loss, right? And then you could have just waited for price to go there. And if it goes there, then you enter. And if it doesn't, then you don't enter. This just makes the risk structure so much easier. You have trades that work out a lot more. You have trades that result in more profit more quickly, shorter trade duration, and more profit targets hit. And it's just a win-win-win solution in every way. So whenever you notice that price gets into one of these zones, here's what I actually do, right? Because it's not like I just enter immediately the moment price gets there. I don't use buy and sell limits. A lot of people asked me on yesterday's video, Nick, whenever price gets to a zone, if you just have an alert there and you're going to enter at the zone, why not just set a sell limit there, right? Pending order essentially that you place with your broker that says when price gets there, automatically enters you into a sell. And you can set up your stop and target all beforehand. Why don't I do that? Well, it's very simple. There's a lot of volatile news events and random price spikes that can happen that are not on the economic calendar, and you don't know when one of those things could be happening. So for example, whenever you go back in the chart and you look at data, you will see crazy spikes, like stuff like this right here, right? Intermittently, you will find stuff like this happens regularly. Now, generally, the cause of these spikes right here are some sort of economic or fundamental news event. And again, not all these are on the economic calendar, so you can't just go to Forex Factory or FX Live or MyFX Book economic calendar and see all these preordained news events, right? So some of them are scheduled, yes, but some of them are just random shit that hits the market. Trump makes a tweet, we're going to do 100% tariffs on China. And then you see a crazy huge market spike. You cannot predict when those are going to happen. So say, for example, you wanted to sell right here, and this is just an example. This is just a cherry-picked example. Just listen to the concept. That's all I'm trying to illustrate here. Let's say that this is a weekly zone, right? Let's say it's a weekly daily resistance zone, and you want to sell right here, right? So you'd want to sell with a stop loss, just above the zone and entries at the zone, target at 1-to-1 risk reward ratio. So setting it up exactly as I would, right? Except this is just the 1 hour instead of the weekly or daily like I always use. If you entered a sell limit there, the moment your sell limit gets triggered, this candle is so volatile that it spikes above the zone and would have instantly hit your stop loss, okay? So here's what I do is I just use an alert, right? I just put an alert there at the zone. And then what happens is if I get that alert notification go off, I have it set up on push notifications to my iPhone. No matter what I'm doing throughout the day, I'll get an alert pings directly to my phone. TradingView is one of the only few things that I have notifications turned on for, except for calls and texts from family and my wife. And so when I do get an alert, right, I check my phone pretty much immediately unless I'm like in the sauna or working out or in the shower or something like that. So pretty much within a few minutes, I'm probably going to be able to check my phone. And what I'll do is I'll go to the chart after I get an alert hit, and I'll just make sure the market is still quote unquote steady state. All that means is that there's no crazy volatile news events happening that's causing price to spike through a zone. Normally this only takes 60 seconds. I check the chart, I go, I open it, I make sure we're not having a crazy huge candle spike past the zone. And as long as that's the case, right, as long as we're just getting up into the zone and price is hitting it, and then there's no crazy huge candle and volatility that's just surging past the zone really quickly, that allows me to avoid most, not all, but most spikes like this where price goes through the zone really quickly. And because of that, I delete trades from my trading account that would have occurred, that would have been like that, where I would have gotten stopped out immediately. It's a lot better and safer of a way to enter trades, okay? So I don't wait for confirmation for price to go away from the zone. I just check the chart to make sure price is not breaking past the zone, and that's like, what, a 30 to 60 second thing. So for example, when this would have happened last night, right? Let's say I would have got the alert. The alert was sitting like right here around this high. So right here in this region. If you don't believe me, let's actually go and look at my alerts. GBP AUD crossing 2.0314, and it was at 22:10. So it was at 10 p.m. last night. So 2.03104. So 2.03104. So he was right here in this area. So that's where it was. So whenever I would have checked this, right, the alert would have gone off and I would have seen price spiking up here. And so the candle would have been open here on the 1 hour, right? So it would have been open up here. And then as it started to lurch back downwards, what I would have done is I just would have said like, okay, like, yeah, it's not breaking the zone. It's not like a crazy huge news candle that has instantly spiked through the zone and instantly invalidated and gone above. We're hitting here, and then, it doesn't look like this is going to be a crazy fundamental news event that causes price to just lurch throughout the zone and continue up like 100 pips. I just would have entered the trade, and then the entry, right, sometimes I'll get a little bit better. It'll be up here. Sometimes it'll be a little bit worse. It'll be down here. But what I'm saying is I'm not waiting for like a 4-hour candle closure, or even like in this case, like a daily, like look at that. If you would have waited for a 4-hour candle closure, it might have worked out in that case. But you'll also have people that are going to be waiting for like a bearish engulfing candle before it goes. And now you're entering down here. Now your stop has to go way the hell up here. God forbid you're trying to get a 1-to-1 risk-reward ratio, let alone a 1-to-2 risk-to-reward ratio. You'll be sitting in your trades for weeks and weeks and weeks. Trust me, I've done this before, okay? I know what it's like. It's not the most optimized way to trade, in my very humble opinion, having been a super humble person that has humbly made millions of dollars trading Forex, crypto, and stocks over the past humble decade of my trading career. I'm just saying it's not as optimized. So instead, if you're entering right here around this zone, right, you can put a stop loss above and a target below. Your trade duration is much quicker. You're not sitting in trades forever. And you're also not sitting here trying to play the game of speculating where price is going to go. Asking yourself, okay, we've got a bearish engulfing followed by a 3 triple top doji wagyu beef bullish candlestick closing above the close of the last close of the candle close and the previous prior bar high. You don't have to do any of that stupid nonsense, right? You could just enter whenever price gets to the zone relatively immediately, provided that it's just not like spiking past it or there's not some crazy move. And every now and then you're going to be wrong, right? Say you would have entered here when price gets down here into the support zone, right? So price comes down here into support. Let's say you had your alert like, something like right here around these lows. So that would be like right here in price. So say your entry would have gone down here, right? This is a case where price, it hits the zone. And then let's say that you were not too alarmed by these candles, right? So let's say you entered there on that candle, right? It would have looked like that whenever price got there. That's not a particularly alarming candle, right? It's hidden there. It pushes up a little bit, it closes, and it doesn't break the zone. So you could have entered the very next candle drop below the zone, right? So you would have been stopped out, or you would have gotten out at like, let's say it goes here and breaks the zone and you close halfway to the stop loss, right? Which is what I will do oftentimes. Not every time, but oftentimes I'll get out for a smaller loss than whatever it normally was. You're still going to end up probably taking a loss on something like this, and it never came back to break even. So there's no way it would have gotten out at break even. That's going to happen sometimes, but that's what we have a stop loss for. Stops are put in place for the case of emergencies. Most of the time you can get out of trades at a break even or a smaller loss if it loses. And if it wins, you just hold it to the profit target, right? Don't close it early most of the time. I'm not saying that context doesn't matter. I'm not saying you can't exercise your intuition, your subjective discretion and discernment of price action. I'm not saying you can't have a little bit of wisdom from your applied experience to be able to make those kinds of decisions. But what I am saying is that waiting for confirmation is one of the stupidest, most foolish ideas I've ever seen, just because it ensures, like it guarantees you're getting a shittier entry. The best entry is at the zone. Price is either going to break it or it is going to bounce at the zone, and you don't know what will happen. As long as you're making more on winning trades than you lose on losing trades, that's all that matters. I'm still sitting in my AUD JPY trade.
For those of you that were getting the entry on
I posted this on my Instagram yesterday. This is the only Instagram I have, so please, so there's like a million fake accounts of me. This is it right here. Do not get scammed by fake profiles of me. So I was waiting on price on 80 JPY to come up a little bit deeper into this resistance zone last night, but instead it broke below, and you can see what ended up happening. You can see that here on 80 JPY this morning, we had price go all the way down here into profit on these lows down here. Then it bounced, and now it's coming. It hasn't gone up all the way there yet, but we might be able to get an entry. This went to $6,000 profit. Now it's coming back up. So what I'm doing here is I'm waiting on 80 JPY to go deeper there into that zone. And if it gets up here into this zone, I'm going to be entering a sell, which now it looks like it's falling away again. Yesterday, my entry's around the average price right here. So where price is currently at is about where my entry is. It went up close to this zone twice after I'd entered, had a huge drop into thousands of dollars of profit. Now it's come back, and my alert's literally sitting right here. My plan is to be able to add a position right there with small risk if it gets there. I can enter a trade right here. I can put my stop loss just above this zone, and it's like an additional entry, and I'm holding my original risk structure. So my original risk structure trade is like this, right, around the current market prices, so about right in here. Stop loss is above this zone, and a target is at a 1-to-1 risk to reward ratio. So the trade I'm in right now looks something like this, right? So if we're going here, we're looking at my actual terminal. You can actually see my entry and everything. Well, I guess you count on Instagram. But you can see it right here, $3,324 in profit. This is my entry price, is 100.91. My stop loss way above the zone. So we're going to see what happens. If I end up entering this right here and it goes up and stops me out, that's going to be perfectly fine. I'll just lose this little trade here. And this will lose, a little bit. No, I'm going to risk probably like 10K, 20K on that. And I remain in this one for a 50. I don't know if this is a 25 or a $50,000 risk. So I'll be remaining in that one. USD CHF, I was waiting for it to pull back for me to be able to get an entry here at the support zone. My support zone was down here earlier for my entry I was going to re-enter at, but it didn't come all the way to this support zone, so I've just adjusted it since I woke up this morning and saw that we made a higher low right there. If it comes back there, I might be entering along depending on what happens. Everything else is looking the same. I already covered this in yesterday's video, so I'm just going to go ahead and just kind of skip all this stuff right here. You can go watch yesterday's video if you want to learn that. If you want to learn how I trade, I teach this whole trading system for free in my free trading. It's the link in the description. Just go and watch that. It's a comprehensive 1-hour training course. I have it hosted on my website. You can go there. You can literally learn everything about how I trade. It's 100% free. There's nothing. There's nothing weird. There's nothing. I don't hold anything back. It's nothing. It's not a lot of mental gymnastics or crazy complicated explanations. Just a 1-hour video about exactly how I trade. So that being said, I'll update you guys on Instagram for what I do for like the rest of today on this trade, and I will see you guys in the next video. So I hope you have a good one. Cheers. See ya.